Hey there, it's Mark from Caliber Home Loans. It is Friday the 17th, and we're going to go through the mortgage market over the last week, what to expect for next week, and a little bit about programs, especially MISHDA. MISHDA is getting pretty backed up, so we'll talk about that also. And then we're going to finish up with a response to Susie Orman based on actual facts, and so we'll get to that after we talk about the market. So let's go ahead and dive right in. So this is today's chart. So remember, this is a bond chart. This is the bond price. As the price goes down, the yield goes up and vice versa. So you can see that we started higher at the beginning of the day. The actual open was right about here. So we closed Thursday here, and so there's a little bit of a spike at the open, and then it fell off. And so we didn't lose a lot of ground, but pricing did get worse from yesterday. We actually did a reprice late yesterday, and then it got a little bit worse from there based on the pressure on rates. So pricing got a little bit worse late yesterday and today. So there really is no rhyme or reason for this. I mean, I looked at all the data that came out, and it was pretty much in line with expectations. I think that this is just, as the stock market does better, not that the stock market's pretty flat today, but as the stock market does better, money typically comes out of the bond market, which puts pressure on rates. Sometimes there's just not a real clear indication as to why the investors are selling off bonds. So let's take a look over the past week. So you can see that at the beginning of the week, we fell off the cliff. And then as we got into Tuesday, pricing got a lot better, and rates came down a little bit, and then then bond pricing got lower, which pushed rates up again, and so then we kind of hit the peak for the week about 11, 12 o'clock yesterday on Thursday, and then rates started to then the pricing started to tumble, and rates went up. So that's over the last week. But again, there really isn't any clear cut. The jobs, the unemployment numbers came out pretty much as expected. So everything was pretty close to expected. The retail sales came out higher. So and again, good news on Main Street is bad news for bonds. So the retail sales did come out higher than expected. So that put a little bit of pressure. But with the Fed spending as much money as they're spending every day, they've held it pretty consistent. So let's look over the last month. Obviously, pricing has gone up in the last month, which pushes rates down. So that's good for buyers and really good for sellers also, because it keeps people in the market, keeps more buyers in the market because they can afford more homes as the rates come down. So rates are still in I know that there's a lot of news reports that came out that said that rates have gone under 3%, but that's, first of all, we don't know how many points they're charging to get to that rate because they never say. And that was pretty much a short-term endeavor, because the media is always behind a couple, 3 days when they start putting this news out. But the big thing is we don't know if it's an average rate based on the average amount of points. They just put a number out there and they don't back it up with anything. So moving forward for next week, we're looking at so next week we're really it's not much is going on. The weekly jobless claim will be out next Thursday, and then new home sales will be out next Friday. So that's really about it as far as actual movers. So it just depends on what the stock market does, and any different news about the pandemic and possible vaccines. This stuff moves all the markets more than economic data these days. So it's just dependent on everything that's coming, all the news that's coming in, and all the information that's coming in. So I do want to touch a little bit on the products. So I do a lot of MISHDAs, so I watch this every day. So MISHDA is more than a week behind. So they're pulling from July 7th. So they're more than a week behind now, 10 days behind in getting to a file before they pick up a file for the first time. So if you're going to do a MISHDA deal, I would write in a 45-day time frame to close, just in case. It's not, I mean, we're not having an issue on our side underwriting, but once the lender underwrites the file, whether the program is a conventional or an FHA, once we approve it, it has to get sent to MISTA. And if they're not going to look at it for 10 days, that's going to put us behind. So just know going into it that you're not going to be able to close a MISTA in 30 days. I mean, it's just, I don't think it's going to be possible between the appraisal and everything else. So you might as well just level up with the sellers and the buyers and say, let's give it a 45-day time frame and go from there. So the other thing I want to talk about is, Susie Orman put out this post that talks about foreclosures. So I want to talk a little bit about that. So this is the post that Susie Orman put up. This is a week or two ago. And so she starts out, she'd absolutely wait until September, October, November of this year before even considering buying a home. Her line of thinking is that there's going to be a ton of foreclosures by the time September rolls around. Why she thinks that, it's a mystery to all of us. So she gives the example of $300,000 houses are going to be going for 150 grand, and if you own a $300,000 house and you're trying to sell it, or even if you're not trying to sell it, your value is going to drop like a rock. Well, that might happen in New York. I don't know what the New York market is, but that's certainly not going to happen in the Midwest or in Michigan. I mean, I just don't see it. The numbers just don't bear it out. So first, the lender or servicer is not going to foreclose until at least August the 31st, and then it's going to take another 3 or 4 months to get it through the system. But anybody that's in forbearance, they can be in forbearance up to 12 months. So I don't know why anybody would think that the banks are going to rush out and start foreclosing on people. If you're in forbearance, all you need to do is ask for an extension, and it's pretty much a given. Now, yes, I agree that some percentage of the forbearance pool are going to end up not getting a job and will have to move out of their homes, but I don't think foreclosure is necessarily going to happen. And again, if you experience financial hardship due to the pandemic, your automatic forbearance is for 180 days, and then you can get it extended another 180 days. Well, now we're out to the middle of next year. So again, I don't think there's going to be this mass foreclosure issue. Now, if you don't have an agency-backed loan like an FHA, VA, rural development, Fannie or Freddie, and you have a portfolio product like jumbo loans, certain types of construction loans, that might be a different issue. Then it's up to the banks that are holding that loan to make that decision. But if you've got an agency loan, you're pretty much protected until the middle of next year. So 77% of all homeowners that are in forbearance, which are past due, have at least 20% of equity in their home. And 90% have at least 10% equity in their home. So the high level of equity provides options for homeowners, policymakers, mortgage investors, and servicers. This isn't 2008 where all of a sudden we're 30% below where we were yesterday and everybody's underwater. That's just not the case. 58.7% of all homes in America have at least 60% equity. There is a ton of equity out there nationally. Now, I'm not saying that everybody's got equity, and I know that a lot of the people that are in forbearance tend to have lower priced homes because of what they do for a living, and that's a generalization. And so they're going to have a little bit less equity, but all in all, a lot of people have a lot of equity. So for those waiting for mass foreclosures, this is not 2008. And I just keep coming back to this one point. Why would you foreclose when you can sell and make money? The bank doesn't want to foreclose on you. They just don't want to go there. So it's expensive, it's time consuming, it's a pain in the neck for everybody involved. If you, for some reason, are not going to be able to come out of forbearance and you have to sell the house or you have to move, then sell the house, put it on the market, sell the house, take the check and move on. And I just don't agree with some of these people that think there's going to be this mass extinction of mortgages out there in the next even in the next year. I just don't see it happening. Now, a lot can happen between now and then, but I just don't see it happening. So that's my 2 cents, for what it's worth. So that's pretty much the wrap up for today. There isn't too much information on the program side, mortgage program side. I mean, I know that the jumbos are starting to loosen up. We're coming out with, we're bringing our jumbo back online Monday or Tuesday of next week, and I don't know what the pricing is going to look like. So that'll be nice. You know, it's still a great time to buy. I mean, I don't care what anybody says. If you're working and you can qualify, I know it's tough out there. There's a ton of buyers for every house. My only suggestion is that whatever the buyer is pre-approved for, I would go look at houses that are $20,000 less, because you're probably going to have to overbid to get the house if they really want it. So that's my 2 cents for that. So if you need anything, let me know. I'm doing a ton of pre-approvals, 248-705-8431, and have a great weekend. Thanks a lot.